Good morning, this is the Phoenix Blue update for Wednesday the 14th of December, presented this morning by Tom Colley. Right, we're here. It's the day, finally, of the December FOMC statement following a two-day meeting. This is the big event that we've been waiting for. The last time we had a rate increase was this event last year in December. Now, the markets have had, or the futures markets have had a rate rise of 25 basis points priced in since the 21st of November. Now, the question really is not will we get this, but traders and markets will be looking to the question, what happens from here? What happens next year? What sort of forward guidance will we get? When we got the rate rise last year, it was again a 25 basis point rise. At that time, the futures markets had that written or priced in, or 70 as a 75% probability. What we then thought, following the rate decision, was 3 days of a bullish dollar before it broke significantly to the downside, and I do mean significantly. Following that, this time we've got 100% expectation, and the way that the FOMC decision comes out is really in three stages, as I see it. The first one and the quickest one to measure is the Fed funds rate, which comes out 7 o'clock this evening UK time, and that's a simple numeric thing. Currently, we have rates at 0.5%. We're anticipating, and the markets have priced in a rate rise to 0.75%. Anything different from that, and the markets will go crazy. If there was a rate rise by 50 basis points up to 1%, we'd see a rabid dollar climb. If we don't get any rate rise at all, then it's fair to assume that we'll see the dollar move very, very dramatically in the other directions. The probability of either of those events occurring is, we believe, extremely limited. It's after that, or at the same time, the FOMC statement is released, but this takes some time to decipher. So we sometimes get an immediate reaction and then a counter reaction once the information in the statement starts to be taken on board. And we saw that very clearly through the ECB rate statement last week. Now, when we get the FOMC statement, that will give some of the reasonings behind the FOMC's decisions. It will hopefully, or will give some sort of indication of how they see further rate rises going forwards. The markets as a whole don't anticipate another rate rise until at least June 17. One of the reasons being is we've had a high value of the dollar. We've had a decreasing in the bond values, which increases the bond yields, which is effectively interest rate rises. So there's some control on the markets coming from outside factors, which will have helped the FOMC. But probably what's going to be the key factor in this is what's called the dot plot. Now, if you've not seen that, just simply Google FOMC dot plot and you can see what it is. It's basically a graphical interpretation, a summary of how individual members of the FOMC have or predict on the rate rises into the future, or rate reductions into the future. I'm saying rate rises, but we can't necessarily assume that, but that tends to give the timing, and it's that dot plot in comparison with the previous dot plots which will give markets an indication of how the FOMC, the future for rates in the States. Once we've seen that, half an hour later we get the FOMC press conference where we have Janet Yellen speaking, and that allows the markets to interpret what the statement has said, and also gives them the opportunity to interpret how, or the general attitude from Yellen and the FOMC. So it's not a simple, here's a number, We'll get that number. That number is probably the most certain thing this evening. It's what comes after that and how that's interpreted. What this means for us in the markets here at Phoenix Blue is we have a view as to which is the higher probability of the direction that the dollar is going to move, and that's to the downside. However, in events like this, it's the volatility. You can be right with your direction, but can be spiked out by the volatility, which is potentially what could have happened to anybody last week at the ECB event when the price spiked right up into our market cap before shooting back down again and then moving further to the downside, which we actually caught live as a rejection or a false breakout. So if you're at your screens, that's something that is potentially to watch out for. But the rule we'll be working to here, if we can't have one of our current trades with a stop at break even, then we will simply close that trade and not have risk on the table. It's not about being right and wrong. This is purely about protecting your capital, because you can be 100% right, but within a split second you could have been stopped out before potentially making a lot of money. Okay, over to news itself. Yesterday we had CPI in from the pound, which came in just above expectations. Gave the pound a little bit of boost in the short term, but the pound did fall back after that. This morning, 9:30, we've got average earnings and claimant count for the pound before a speech by Governor Carney at 12:15. Bear in mind that is the day before we have the Bank of England rate statement tomorrow. Then early this afternoon we have retail sales, both core and standard retail sales, and PPI from the States. Now, in principle, I would be very surprised if these do anything to the markets ahead of the Fed. I believe it's too late for anything here to influence what the Fed actually decide, and by that time the markets are usually pretty subdued ahead of a big decision anyway, but certainly something to watch out for. Then we have the crude oil inventories. We've obviously had a big bullish move on crude. It gapped up following the agreement between OPEC and non-OPEC producers at the weekend. Since then it's actually been falling back. That could well determine in the short term which way price goes there. Then we have 7 o'clock this evening, we've got the FOMC statement, funds rate and press conference we've already discussed. We also have FOMC economic projections, which is one way of looking at is that's the data that the FOMC have produced for the meeting to make their decision based upon. So there could be a lot of information there, and probably what comes out of that will be interpreted in the longer term. Also, overnight, we've got employment change and unemployment rate from Australia, and then just in case on the timing this morning, in the morning, 8:30 in the morning, we have the LIBOR rate and the SMB press conference at 8:30 in the morning. In principle, that would give them an opportunity to immediately react to what the Fed has done. That would be relatively unusual because the SMB don't tend, I think I remember from the last time I mentioned this, it's about 6 years since they actually changed the rate at a meeting. They're inclined to do it more secretively between meetings, but still something to be aware of first thing tomorrow morning, and then obviously we've got the Bank of England later on. Okay, so that's the schedule of events for today. Looking at the markets themselves, here's the dollar index. We had a big strong move away at the early part of the week. Yesterday that movement didn't follow through. The markets were very rangy through the day. This morning, a bit more to the downside there. We have a number of levels that we will watch if the dollar does what we anticipate, but from a perspective of being in a position ahead of the meeting, I would have preferred a bigger follow through to the downside from Monday's move there. Here's the yen, and this is even more so. We got a rejection of this 116 level, and as you can see, we basically had a doji bar yesterday, so that isn't moving to the downside as we'd hoped. There is a bit more downside in it this morning, particularly since this slide was taken. But this is a case in point in respect of, you can see where my entry is on that trade. Can I realistically put my stop to break even? If the price remains where it is at the moment, the answer is no. Yes, I can put to my stop to break even, but it's just going to get stopped out anyway. I may as well simply close that trade out at that point and look to take advantage of where price is moving after the decision. The euro, somewhat similar. We had a huge engulfing bar through Monday. Follow through was more limited yesterday. It is following through again a little bit stronger to the upside, reflecting a bit more dollar weakness in that respect. Again, this isn't a market where I'm actually in at the moment. I won't get an opportunity to get into this market ahead of the Fed decision. I am, however, short the Swissy for exactly the same reasons. Now, this is a market that has followed through. My rules on this trade wouldn't normally allow me to get my stop at break even, but let's say this was the position this evening, I would move that stop to break even in the hope that there isn't that much volatility, and we could, if dollar comes to the downside, and we can see the Swissy strength play out to the downside on that basis. Over on the pound, well, we had a big look up yesterday, or a decent look up, and as I've already mentioned, price came back down. Not something that I'm particularly interested in versus the Fed decision immediately. However, we will be looking to trade pound strength if the dollar does weaken into the end of the week and possibly the early part of next week. Over on the S&P, well, all the US indices made record highs again yesterday. The Dow is a fraction off 20,000, which is something that the markets hadn't been predicting only a matter of a month or two ago before the Trump election. You can see I've got a long position in the S&P there. That is intended to be basically to play in with the potential for dollar weakness following a Fed decision. If we get dollar weakness, that will tend to mean that there isn't any indication of aggressive hikes going into the first half of next year, and a devaluation in the dollar. All those things help businesses, particularly in terms of exports, etc. So we could see further high side to all the American indices on that basis. We're very bullish seasonally at this time of year through to the end of the year, so that would be a trade that is likely to be less volatile than, say, the currency trades, but again, a position that we'd really like to be in some position of stop at break even going into the meeting. I also actually have a position long on the DAX, which in light of the Fed decision is almost a hedge trade, in that if we get dollar weakness, we'll get euro strengthen for exactly the opposite reasons to what I've just mentioned on the dollar versus the S&P there. If we get euro strength, that means the index, the DAX index, is likely to fall based on that strengthening euro. That's a trade that I've already got profits locked in on, so if it goes through and stays in place prior to the meeting, it will effectively be just a safe hedge in case our bias on probability is incorrect. But just to re-emphasize, the idea is to go into the meeting without any risk. We'll go through the meeting and see if it offers an opportunity. We're not particularly here at Phoenix Blue news traders, but as we learned from the ECB last week, if we get a false break and then a rest between the initial data coming out at 7 and Janet Yellen speaking at 7:30 at the press conference, that might be something we could take advantage of with a relatively small risk. But our objective is really to take advantage of the net result of the Fed rate decision. What's going to happen today certainly potentially has significant or significance right into the early part of next year, and we'll probably still be trading the reaction to it well into the first quarter. Okay, guys, that's it for today. So I hope I've preached enough caution there. We know it's all about preservation of capital. We don't want to put those risks on the table. We don't want to go into the break, Christmas New Year break, having taken a big hit. That's never good for psychology. The break's a good time to review what we've done. It'd be nice to go into the break with a nice month for December on the back of what happened. But from a ongoing point of view, a loss at this time of year can be painful and affect how you are able to review your trading and plan going through to next year. Okay, just a quick word on videos. We'll be here on the morning updates for the rest of the week. Our plan is then on Friday to make Friday the last regular morning update, simply because there will be a lack of liquidity in the markets. We may well not see any opportunities arising, and it's very difficult to make videos when there's nothing to say. However, if there are any events right through the Christmas period that we feel are worth talking about, we will produce a video. It is therefore important that you sign up to the the Phoenix Blue Trading YouTube channel. Therefore, you'll get an email every time that we do make a video, so you'll know that is coming rather than just checking every morning. Okay, guys, that's it for today. Let's hope you have a successful day and you get something out of the Fed decision. If it's only a learning process, that's great. We go forward. Okay, have a great day. Thank you and goodbye.